A shakeup in the financial industry as LendingClub's stock drops 26% on news the company's CEO Renaud Laplanche is stepping down. Shares are down 81% from an all-time high of $27.90 on December 17, 2014. Here with more details is Heard on the Street columnist Aaron Back. Aaron, thanks for joining us.
My pleasure.
So do we know exactly why the CEO is stepping down?
Yeah, so what the company said today is that basically, there were $22 million of loans that LendingClub sold to investors that were against what this investor had expressly said they wanted. And the company said they uncovered that in an internal investigation and that was why the CEO had to go.
And what happened to those loans?
Well, they were sold to the investor and the company had to buy them back. And they've since sold them to another different investor.
Now, so what's next? Are regulators expected to step in?
I don't know that regulators are going to step in. I think it's on the company now to basically convince everyone that they have dealt with this internally and that it was a one-off and that it's not a systemic problem for the company.
Right now, before today, were investors concerned about LendingClub's practices?
I mean, I think investors have been a little bit worried about this whole peer-to-peer lending space for some time. Because basically, these companies, they arrange loans to borrowers, and they don't hold those loans. They sell those loans to investors. And what we've seen in the last few months is that investors are starting to get nervous and are buying fewer of those loans. So there's a bit of pressure on the whole space now because of that.
So are other companies then in this sort of peer-to-peer online lending space expected to face similar scrutiny?
I mean, I think this was kind of a one-off thing that happened at LendingClub, but it kind of reflects a bigger issue for the whole industry, which is that a lot of investors are getting nervous about buying these loans. And you've seen that in the results of several others, including On Deck, for example, also had a not very good quarter in the first quarter because a lot of investors were simply not wanting to buy the loans they were making. And
all of these companies sort of came to a head right after the financial crisis, is that correct?
Yeah, I mean, the whole industry sort of developed post-financial crisis, and the argument for them has been that they disrupt what normal banks do, they connect borrowers to lenders directly, but this is a new industry and a new business model.
And their valuations seem to have been higher than banks, bank.
Much higher, and the stocks have all come off a lot. And so, I mean, this is a new business model. And so it has to be tested. It has to go through some issues and come out well on the other side. And so it's being tested right now, is what we're seeing.
So where it goes remains to be seen.
Yes, I think the companies really need to show that they have the trust of investors, that people are still coming to buy these loans. Because if investors aren't buying the loans they're making, then it's pretty much lights out for these companies.
Aaron Back, thank you so much for that.
Thank you.